Okay, before we jump in, you know the drill. This is all for educational purposes and it is not financial advice. Always do your own research. Hey everyone, welcome back. We are looking at PLAZM Day 85, and wow, what a day it was. The protocol faced a massive release, but instead of breaking, it just absorbed it. And that triggered a crazy surge in the burn rate. We've got a lot to unpack, so let's get right to it. All right, let's just rip the Band-Aid off right away. You've seen the charts, I've seen the charts. It's red. The PLAZM price is down about 7.5%. That's the big number everyone's looking at. But is that really the whole story? Not even close. You know that headline number? It almost never tells you what's really going on. And today, what happened underneath the surface is, well, it's a completely different and way more interesting story about just how tough this protocol is. So you can think of today as the ultimate stress test. This wasn't just another Tuesday. The protocol got hit with the single biggest token release we were expecting all week. It was like watching the system's immune response kick in real time. And just look at the scale of this thing. Yesterday, we saw about 173,000 tokens hit the market. Okay, manageable. But today, boom, over 473,000. We're talking nearly 3 times the pressure from just the day before. I mean, in a lot of other systems, that's a knockout blow. So what happened with PLAZM? And this, my friends, is where the real story begins. The pressure didn't just not break the protocol, it actually kicked the burn engine into overdrive. It's like the system used that negative pressure as fuel to start permanently destroying its own supply at a crazy rate. And here's the number to prove it. Over 20,000 PLAZM tokens. Gone, poof, permanently burned and removed from circulation forever. And that's just in the last 24 hours. I mean, let that number really sink in for a second. The total amount of PLAZM that has ever been burned jumped by 16% in one day. This is that anti-fragile design we're always talking about, playing out right in front of us. When there's price pressure, the protocol's defense funds can actually buy back and burn way more tokens for the same amount of money. The pressure actually makes the system more efficient at cleaning up its own supply. And you can literally see the impact right here on the supply distribution chart. See that burn slice? Yesterday it was at 3%. Today it's at 4%. That might not sound like a huge jump, but it's a permanent change. It's 1 whole percentage point of the total supply that is now gone for good. All right, this next part is, for me, the most mind-blowing piece of data from the entire day. It's completely counterintuitive. We're about to see how, on the day of the biggest token release, the amount of liquid supply actually went down. This is just wild. Look at this. On the left, you've got almost 500,000 new tokens dumped into the system. Logic 101 says the liquid supply, the stuff people can actually sell, should have exploded, right? But nope, it actually went down by 20,000 tokens. So the big question is, where on earth did all those new tokens go? Well, here's your answer. 2 things happened. First, people showed some serious conviction and staked an extra 30,000 tokens, locking them up. And second, like we just talked about, that burn engine vaporized another 20,000 plus. So you add those together, that's over 50,000 tokens that were pulled out of the liquid supply. They were absorbed faster than the new ones could cause damage. Okay, so the system was clearly working hard. Let's do a quick status check on the defense arsenal. You know, the buy, burn, build pools that do all this work. How are they looking after a day like today? They did exactly what they were supposed to do. About $3,460 was deployed to prop up the price and, of course, to fuel all those burns we just saw. And as you can see, there's still a really healthy amount of firepower left in the war chest, especially in those pools holding eShare, which are doing a lot of the heavy lifting right now. Now here's the cool part. Even while the defense pools were spending money, the protocol's core asset base was actually growing. The number of bonds, the things that actually generate the yield, went up by 43. We're now over 6,000 total. And that's why the bond growth is so important. More bonds means more daily profit. Another $263 in yield was generated, and that money gets piped right back into those defense pools we were just looking at. It's a self-sustaining loop. The yield engine is basically working 24/7 to reload the ammo for the defense system. So we took the biggest punch, and we're still standing. What's next? Well, the best news of all is that when we look at the release schedule, it looks like the worst of it is actually over. The peak pressure is now in the rearview mirror. Yeah, you can see it plain as day on this forecast. Today's massive 473,000 token release was the big mountain we had to climb. Now, tomorrow is still a decent-sized hill at 325,000 tokens, don't get me wrong, but the trend from here is generally down. The protocol faced its biggest test of the week, and honestly, it passed with flying colors. All right, time to put a bow on this. What's the final verdict for day 85? It's simple, really, but incredibly powerful. Yeah, the price you see on the screen is down, but the protocol itself, it's actually stronger today than it was yesterday. I mean, this scorecard tells the whole tale. Price? Yeah, we got a red arrow. But look at the protocol's vitals. Burns, 2 green arrows, way up. Staking, green arrow, up. Liquid supply, a down arrow, which is exactly what we want to see. And the bonds, green arrow, up. Every single important internal metric got healthier, even under all that pressure. And this is the perfect picture of what it means to be anti-fragile. See, a system that just survives a punch is robust. That's good. But a system that takes a punch and actually gets stronger because of it, that's anti-fragile. And that is exactly what we saw happen today. Today was the local peak. The protocol absorbed 474,000 tokens and emerged with accelerated burns and increased staking. Tomorrow brings 325K more, but if today proved anything, it's that PLAZM was built for exactly this. The defense continues. And we'll wrap it up there. But as always, just a final reminder, this is all for educational purposes. It's not financial advice. Please never invest more than you're willing to lose, and always, always do your own homework. Thanks for tuning in, and we'll catch you on the next one.